Okay, time for Work Together 4-3 from our Century 21 Advanced Accounting textbook by Gilbertson and Lehman. First statement we're going to prepare is our income statement and prepare vertical analysis ratios for it once you're done. So we just did the departmental margin statements in 4-2 and now we're on 4-3. So we'll start with our income statement. We have two departmental columns for kitchen and bath. So let's get our net sales for kitchen, and we can find that from the departmental margin statement kitchen. So our net sales was $403,663, and for bath it was $300,723. Cost of merchandise sold for kitchen, cost of merchandise sold $190,539. And then for bath, I just use an equal sign so I can link them together. $127.47. Our gross profit, we should just be able to subtract. $213,123, same formula, so I'll drag that over. And because we did subtract, we calculated, we should be able to put, well, I kind of want this one. There we go. A thick bottom border there to show that we calculated. Our direct expenses for kitchen, $76,215. Our direct expenses for bath, $92,632. And so we will calculate again our departmental margin. We will subtract. There we go, and pull that over. $87,343. So our total company, we can add them together, and we should just be able to drag those down. But I kind of like the bottom border, so I'm just going to format Painter that real quick so that it's formatted the same all the way across. So percent of net sales, of course our net sales is 100%, and then each one of these amounts as a percent of net sales, we will just divide. Now, since I always want to divide by net sales, I can just put some dollar signs on this number to make it an absolute reference. And that allows me to just drag that whole formula down so it always uses E8 as the denominator. And now we'll do our indirect expenses for the total company. Credit card fees expense, we should be able to get that off of our trial balance. And then let's just check depreciation expenses, insurance, miscellaneous, payroll, rent. If those match up with the exact order on our adjusted trial balance, we could just drag it down. So our first one was credit card fees, depreciation, insurance, miscellaneous, payroll, rent, and then salary, administrative, supplies, uncollectible, utilities. They all just line up nicely. So we'll just get the first amount and we will drag that reference down all the way through utilities expense. And then we're going to add them up. So let's go ahead and put that bottom border there for total indirect expenses. Here we are, and of course stop before your federal income tax expense. We don't put that one up here. Total $146,313.87. We will thick bottom border that number to show another calculation, right? We'll subtract the total of our margin minus the total indirect expenses leaves us with $77,938.69. And then our federal income tax expense. And that number is $16,367.12. We'll subtract that away. So again, we'll do the bottom border to find out our total net income. So $61,571.57 net income. And we will copy this formula and paste it down here because we have to get our vertical analysis ratios here. So 8.7% net income as a percentage of total net sales. Okay. Income statement is done, rounded to the nearest 0.1%. The next one is our statement of stockholders' equity, which we got some numbers from our instructions, right? So $74,000 of share at $1 par value of stock issued as of January 1st. There were 1,000 shares issued during the current year. So we will go to our statement of stockholders' equity. We need to note a few things, like the fact that we have $1 par value, and as of January 1st, I'm not going to give the year because you may use this in multiple years, there were 74,000 shares issued. So at $1 par, that's 74,000. There. And issued during the current year, 1,000 shares. So $1,000 here. Our balance as of December 31st of the current year, there's 75,000 shares. We should probably do a formula. Add them together. And because we added, we would do a thick border. Okay, retained earnings. Balance as of January 1st. We should be able to find that in our general ledger for retained earnings. Actually, we probably didn't post to that. So it's probably in our adjusted trial balance. Retained earnings should be up here in this section. 165,073.83. All right, our net income, we just figured that out. Income statement, net income, 61,571.57, less our dividends declared. We know that also from our trial balance. Dividends declared were the 16,000. So our net increase would be a subtraction. The 61 minus the 16, and since we did calculate there, we'll put a bottom border in. Net increase, 45,571.57. So our balance as of December 31st, we will add those two together. The beginning balance plus our net increase, 210,645.40, which we will underline, gives us a total stockholders' equity of, add the 75 to the 210, 285,645.40. And that's the end of this statement. So we will double bottom border it. And the next thing we should be doing is our balance sheet, and then the statement of cash flows. And you know what? I'm going to do that on a second video.